Well, hello again. It's Serpent Trading with a long-term look into Stagecoach, and I'll use this image as my thumbnail. So let's have a look at the long-term chart, and this is all the price data for Stagecoach since 1995. You can see it's been pretty volatile over the years. Had a good uptrend around this time. Let's just change this to a neutral color. Let's go blue. Yeah, good uptrend from those lows back in 2002. I am looking at this as looking like a flag formation that sort of targeted that low. This consolidation pattern. I'll mention that again, why I think that's important. When I look at the more recent price action, I've established these price zones, and yeah, the share performed all right up to 2015, and it's into this more recent downtrend, and it's rallies occasionally, but overall the past 5 years has been pretty negative, and obviously this past year has been very steeply down. So a lot of people saying this company is undervalued, and I'm not so sure. I think, you're looking at this as a trade, and I'm not seeing the sort of support I'd like to see before I enter something. I'd like to see something more solid than this, and it's a possible new steeper downtrend. If it breaks over here, we'll be looking at a pattern. Pretty hard to tell at the moment. So let's have a look at some of the fundamentals of the company. This is their main website. They've done a bit of a schematic approach to their website. Menu system, I have to admit, I'm not impressed. It's a bit of a jumble, the entire website. So yeah, that is exactly why I left it on market share, so I could actually find it again. Yeah, market share wise, they regional bus services, they've got 26% market share, 14% of the London bus market. You got to imagine that regional buses must have higher margins than London buses. Sujit Khan in the London Mail Post, he stopped any rises to London Transport, so they've been soaking up the costs of that since he's been in charge. Recent news, not much in the way of recent news. I did find this interesting article from the other day. Somebody had a poo on one of their buses. I don't know if this is the exact bus, but that's about the extent of the latest news for Stagecoach. A bit further out, apparently their chiefs are taking a pay cut. It's just talking about the dividend cut. I'll get back to the dividends in a bit. And that some contacts they're bidding for in Sweden and Dubai. Stagecoach were eliminated from bidding for the new rail contracts by the government. I'm not sure if it's still going through a court action, but I suspect they won't have any luck with that. They're going to be out of the rail market when the new round of contracts starts. From a bus point of view, though, the government seem to be underpinning them at the moment, and I think this is what's giving people a lot of hope that the share price is going to bounce back. And it's certainly possible. The government is definitely underpinning them in a lot of places, pumping quite a lot of money in. And also noticed they're getting a lot of funding for greener vehicles and sort of these kind of ideological sort of push forward for improving their cleaning up their bus services. All good stuff, but I'm not sure if that's going to be long-term benefit. So let's have a look at the balance sheet, and you can see in the balance sheet it doesn't look good. Their revenue has dropped considerably over the past few years. I've looked further out than this, and the revenue's been pretty up and down. Even in the years their share price was growing, their earnings were pretty volatile, and comparable with their competitors in their industry. I found this a very concerning number. Current stockholder equity is negative, which causes lots of distortions in trying to predict what their future revenues are going to be. This is their dividend history. See, they had a growing dividend up to 2017. Probably was never sustainable, as you can see from their yield. It dropped and flatlined for the past couple of years, and obviously this whole situation currently, they were intending to pay the same as last year, but they only paid half, and then they cancelled the final dividend. One other little thing I noticed was these guys, UBS Asset Management, have actually increased their holdings quite significantly over the past year. They now have an ownership of the Stagecoach of 2.53%, and that's increased 317% over the past year. I don't know anything about them, but obviously they have some confidence in this company being a turnaround stock. So after looking at that, let's have a little summing up. I've done my numbers. I've planted my numbers in here, and I'm looking at a fair value of 20p. That's really lowballing a lot of the numbers, and with this kind of negative stockholder equity, I think I'm not certain about these numbers. It's very much a guesstimate. Their debt to cash ratio is reasonable. It's not great, but it's reasonable for a company in such sort of dire straits. And return on capital invested, that's not a legitimate number because they're negative current stockholder equity. PE ratios, we've got 10 and a forward PE of 6. When I adjust that for debt, though, I get 25, and averaging out of their sort of past 5 years of income, we're getting 3.2. Also do a fair value assessment based on their dividend yield, and again, it's very much a guesstimate. can see up to 2017 it was rise and then flatlined, went down this year. So I'm just guessing a 3% rise from now on, and 10% return required. That comes in at 56p, which isn't too far away from what they currently valued at. Just looking at summing up at on the Simply Wall Street stock, they have this little blob that they put the value and dividends. They don't expect much from dividends. Health. When it's green, it's good. When it's red, it's bad, basically. They're saying it's trading below their fair value, and interest payments are not covered by earnings currently, which means they're a short-term bankruptcy risk. Highly volatile share price. Yeah, we can see that from the chart. And they've got one-off items impacting the financial results, which will probably clear over the next couple of years if they survive. And their fair value for it is 79 pence, and they do a similar calculation to mine, but they don't lowball any of the numbers. I'm very conservative with my numbers for discount cash flow method, unless I have a lot of confidence in the company, when I might opt them a little bit. I also looked at this is a broker I use, and their fair value came in at 61p, so in the same sort of ballpark. And I think these numbers are achievable if we go back and look at the main chart. And it's this one here. Close it up. Yeah, so if we zoom in, if this was to turn around, could it get to some of these kind of fair value levels? And it could. I mean, we could see this long-term downtrend. I would suggest that the bottom trend line would be a reasonable target, and that's knocking in around 80p. It could even get up to this sort of price level at 88p. This viewing longer term, just shoot out. Might help if I can turn the drawing tools off. Yeah, so from a support perspective underneath, there is a little bit of support right there at 30p. But the way this is looking, that this significant downtrend, if this was to turn into some sort of consolidation pattern, then I think you could reasonably suggest that this could turn into a flag. And then my fair value at 20p doesn't look that unreasonable. Will this happen? I mean, if it consolidates, touches the bottom of the trend, the downtrend, then falls. I mean, if it gets down here, I mean, we are talking serious bankruptcy risk. Not saying it's going to happen, but it's definitely, looking at this chart, looking at the way the price has moved, I don't think this is a complete impossibility. We'll have to really have a good look at this. I'm definitely putting this on my watch list, as the volatility of this stock, anything could really happen. If we do see a nice sort of bottoming pattern here, I think that 88p target is reasonable. Obviously resistance down here at sort of around the 60p mark, 60-70p mark. And yeah, this is going on my watch list. So hope that was somewhat informative for you. Hopefully I didn't make it too long, so I'm gonna have to watch these back myself at some point. And I'll catch you in the next video.